Today we're looking at something, well, quite concerning for South Korea's economic future. We're digging into a new report from the Korea Development Institute, the KDI.
Yes, and it's more than just numbers. It's a pretty serious warning signal about where things might be headed long term.
Okay, so let's get right into it. The big headline seems to be about South Korea's potential growth rate. That's basically how fast the economy can grow without, triggering high inflation, the economy's sustainable speed limit.
Exactly. That's a good way to think about it.
And the KDI is saying this rate could actually fall below 1% pretty soon, within 5 years.
That's the projection, yeah. And it gets potentially more worrying down the line.
Right, because they even mentioned the possibility of it hitting zero growth in the 2030s.
And maybe even dipping into negative territory in the early 2040s if significant reforms aren't made.
Wow. Okay, so a declining potential growth rate. It fundamentally means the country's ability to get richer, to expand economically, is slowing down a lot.
Precisely. It's about the underlying capacity of the economy.
So what's behind this slowdown? The report points to a few key things, doesn't it?
It does. It really boils down to a combination of factors. First, the rapid aging of the population.
Which connects directly to the second point, a shrinking workforce. Fewer people of working age.
Exactly. And the third element is productivity growth, which has been, well, sluggish, not keeping pace.
Let's break those down a bit. The labor part. It's not just fewer workers, is it? It's also about the type of workers.
Yeah, that's a crucial point. You have a declining share of younger workers who are often, quicker to adapt to and drive new technologies.
And that must have a knock-on effect for businesses thinking about investing in new equipment or tech, right? Capital investment.
Absolutely. If your labor market dynamics are challenging and maybe regulations are seen as restrictive, it can dampen the incentive to invest heavily.
Okay, and then there's total factor productivity, or TFP. How efficiently we use both labor and capital. How does aging impact that?
Well, again, it links back to that point about younger workers often being central to adopting and even creating new technologies. Slower tech adoption can really hinder that overall efficiency gain, that TFP growth.
Did the KDI offer different possible futures, like best case, worst case scenarios?
They did. Their sort of baseline scenario, assuming current productivity trends just continue, still sees that potential growth falling below 1% in the 2030s and getting very close to zero in the 2040s.
Okay, so even the baseline isn't great.
Not really. Then there's a more negative outlook. If reforms lag and productivity growth slows even further, you could be looking at near zero or actual negative growth by the 2040s.
Is there any upside, a positive scenario?
There is, but it hinges heavily on successfully implementing structural reforms and, crucially, leveraging new technologies like AI really effectively to give productivity a significant boost.
It's interesting how they compare South Korea to other places. They mentioned the U.S., I think.
Yes, they point to the U.S. as an example where things like a flexible labor market and strong innovation help reverse a decline in potential growth. It really highlights the contrast with South Korea's quite steep projected downward trend.
So the message isn't that this is some sudden shock, but more like the result of not acting sooner on known issues.
That seems to be the KDI's perspective. The demographic shifts have been known for a long time, and the argument is that delays in structural reform are now really starting to bite into that long-term potential.
Okay, zooming out from the big economic numbers, how might this actually feel for the average person living in South Korea?
Well, even the growth in income per person, which is what really affects living standards day to day, could stall out, especially under the less optimistic productivity scenarios. The kind of steady improvement in quality of life people might expect, that could slow right down.
So what needs to change? What are the kinds of reforms the KDI is pushing for?
They focus on several key areas. Making the labor market more flexible is a big one. Also stripping away regulations that stifle competition.
That's a big question. Something definitely for you, our listeners, to consider.